Hello, my name is David Torgerson. I'm a real estate broker in Montana, and I've had a lot of people ask me what's happening in the market right now. And the honest answer, nobody knows. What's the market going to be doing in a year? We've got a pretty good idea of what's going to be happening in a year. We definitely know what's happened over the course of the last 3 years, and we saw unprecedented activity in people buying and selling real estate. And when I say unprecedented, I do really mean historically high numbers at historically low rates. We've never seen rates that are actually that low with that type of buying activity. Never. And what's important to point out as far as that's concerned is that when people think about the future, they usually think about the very recent past. And so they start gauging what they're going to be doing in the future based on what happened in the very recent past. But what's dangerous about that, and what terrifies me as far as financial decisions and good planning, is that it's not a very accurate way of looking at things, because of course the market of the last couple of years, it's gone. We know that. It's totally gone. The interest rates have doubled over the course of 2 years. So they went from roughly about 3.25 to about 6.5 at the high point. My lenders have locked in a lot of people at 5.75, which is actually still 2 points below the running national average for the last 30 years. So the running national average for interest rates right now should be around 7.75%. My disclaimer, I'm not a licensed loan officer, lender. These are just the numbers that I look at as a real estate agent. So 7.75 would be the 30-year average. And we're at about 5.75. So we're still 2 points below. House prices are still really high. And is that going to change? And the answer to that is likely not very much for a period of time. People during the last 3 years locked in at the historically low rates. And for the first time that I've ever seen in my career, people are actually married to their interest rate as as opposed to being married to the house. Usually people buy the house because they really like the house. But what we saw in the last 3 years was that people were buying the house because they loved the interest rate. And the reason for the reduced inventory, I mean, in most markets across the US, they're operating at about 70% lower than what they normally do. It's a huge number. That means that there's only 30% available that is normally available. And the reason that that's so low is that people don't want to sell their house because they have a low interest rate. And to them, I say, well, financially, I guess that makes quite a bit of sense. But do you like the house? Who knows? There are all sorts of other, things that play into that. But that does explain why the inventory is so low, is that people that have purchased recently or that refinanced are not willing to actually refi at a higher than normal interest rate. And so going from 3.5%, to 6.5% is just something that they don't want to do. So in our particular market, what I'm going to do is I'm going to show you the sales price. And I picked the 4 major areas that we have in our real estate market in Western Montana, and that's Helena, Missoula, Kalispell, and Great Falls. If anybody's watching this, they're wondering why I didn't include Bozeman in this. Bozeman is an anomaly. We want to actually look at the data. And so the data here, as you can see, in April 2023, the housing prices for those 4 major areas have basically stagnated for the last 5 months. And so you can also see that from about 2019 is really when all of this started. So pre-pandemic, from 2019 all the way up until about November of 2022, the sales prices were going up massively. And how this plays into this next graph that I'll show you, which is the new listings for this area, is that you can see that even during the time when it started in 2019, the number of new listings was actually declining. So with the exception of one place, and that was in Kalispell, where the new listings in 2021 actually went way up. But if you were to average all of this out, generally speaking, with the exception of Kalispell, the new listings were actually on a downward trend. So in the next graph that I'm showing you here is the pending sales. And if you look at the pending sales, it makes sense that they would be going down too, because new listings, of course, are going down. Now, the pending sales are actually going down at a higher rate than the new listings are. So if you rewind the video and just go back and look at the new listings and then come back to this spot and then look at the pendings, you can actually see that the pending listings are much, much steeper in decline than the new listings. And what that means is that buyers are not buying because the interest rates are too high, or that they're fatiguing out of the market because the inventory is too low. That's typically the only reason why they would ever why you would ever see that decline happening faster than the new listings. So that means that there are fewer buyers, and there continues every day to be fewer and fewer buyers. Then if you look at the closed sales, you can see that closed sales in a couple of these spots have actually plateaued out. So if you're paying attention to Helena, they really, they really haven't changed since December of 2022. You're basically about the same number. And so what that means is that this particular market in Helena is flattened out, but the other markets are continuing to go into decline. Does that mean that Helena is going to go up? Probably not, because other metrics don't actually show that it will. And the big one is that the days on market. So on this graph, you can actually see that days on market has been a slow, steady downward trend, which is good because it means stuff is selling faster, but a slow downward trend from 2014 to now. And now the days on market are starting to go back up. What that means is that stuff is not selling as fast as it did. And if you were to average all this out, it's about 100 days on market is about normal for this market. And we were all the way down. In a lot of cases, we were down to like 60 days on market. So even that being said, when people were saying like stuff is just flying off the shelves, yeah, stuff was flying off the shelves, but it still took a lot of time to actually get them closed. And a 60-day close actually does show that the majority of these transactions that were happening were finance transactions, because cash can usually sell between 10 to 20 days, where finance is usually like 30 to 50 days. So most of these transactions in here were financed. And so that does make sense that the interest rate would have a huge increase, or would have a huge impact on what's going to be happening on home sales. And percent of list price is important to point out too. And what this does show to everybody is that the bidding wars, although they do happen periodically, because there are some properties that are just really good deals and they get bidding wars, but generally speaking on the market, the bidding wars are over. And once the bidding wars are over, that's also a big signal that the market is getting ready to do some sort of an adjustment. So you can see on this graph too, kind of backing up, what caused the big spike is if you look from 2008 to current, well, actually going all the way back to 2014, our median household income in the United States went up a lot. The most that it's ever gone up historically in that time period. So, I mean, we're only talking about a 6-year period. And you can see that on this graph here. Then if you relate that to, if you look at the average interest rates, so we've got the historical right here, the historical 30-year mortgage rates from 1971 to 2023. What we've got is that here's the average rate since 1971 is 7.75%. And here we are, we're sitting at about 5.5%, 6.5%. And how that plays into the income is that while the interest rates are so low, the income was going up, people, because we're in America, people are actually buying as much as they could possibly handle with the interest rates. And so if the prices actually go down, you're going to deal with a lot of people who are completely underwater. And if they're underwater in their house, but they can still make their payment, they're not going to put their house on the market. Why would they? So they'll just make do, gut it, stick it out, whatever terminology you want to use, but they're just going to stay put. And so the inventory likely is not going to be coming back. And what happens with that is that as the inventory reduces, buyers actually will fatigue out of the market. So you still have people that would be willing to buy at a 6.5% mortgage rate, but there isn't anything for them to buy. And so they'll actually settle into their situation. They say things like, I'm going to wait for the market to crash, or I'll wait for market adjustment, or I'll wait for this, I'll wait for this. But the acting word is wait. So they're just going to be waiting. So it goes back to the old axiom of nothing changes if nothing changes. And where we're sitting is that If the buyer inventory, which is currently quite high, if the buyer inventory disappears and somebody finds themselves in a situation where they need to sell and the interest rates are really, really high, what you're going to wind up running into is you're going to be selling for significantly less than if you were to sell right now. And that's something that every home seller that's thinking about selling in the next, say, like 2 to 3 years really does need to take into consideration, is that, am I in a position to actually make this move right now? And if you are, I would highly recommend that you do, for this simple reason, is that we know what the market conditions are right now, but we don't know what the market conditions are going to be in, say, 1 year, 2 year, 3 year, 4 year. We have no idea. So if you can perceive that in a period of time, say in the next like 3 years, that you're going to want to make a move, or say that you don't really feel too comfortable with your particular employment situation, or you're hearing things, it's a good time to liquidate that asset right now. Because as it sits right now, it is an asset. If you wait, it could turn into a liability. And as a real estate broker, and also somebody who's personally gone through a foreclosure on my primary residence back in 2008, I can tell you that you do not want to experience a foreclosure. It's a terrible, terrible, terrible type of a situation. Extremely, extremely uncomfortable. And in my personal situation, it did destroy my credit for 7 years. I couldn't even get a credit card for 7 years. And so I'm not trying to like scare the shit out of anybody, but it is very necessary to understand that when a person enters the housing market, that there also has to be a long-term plan and a short-term plan. And if long-term, you could look at it and you can say, yeah, I think that we're going to be in a good situation, I'd highly recommend hang on to your house, ride it out, see what happens. But if you're looking at the short term, say 2 to 3 years into the future, and say, I don't know, I think that I might want to be in a position where I could sell, or I know that in 2 to 3 years, I'm going to be looking at selling, then you really should probably do it now. Even if you're going to be staying in the same area, find a rental. And it's an unpalatable thing, like, oh, I guess I'm moving from a place that I own to a place that I rent. The benefits of renting is that at any point in time, you can give notice, so long as your lease is complete, you can give notice and move in 30 days, no questions asked. You don't have to worry about liquidating anything. A house is different, especially if you need to get the money out of it. So the point that I'm making with all of this is that if in, say, 2 to 3 years, you see yourself moving, not a bad idea to consider doing it now. If you are considering selling your house in the next 2 to 3 years, it's really important to choose a real estate agent that actually understands what it means to sell in a chaotic or downturning market. And most real estate agents that have been licensed for 10 years or less have only known an upward trending market. And so you want to be really careful about how you're choosing your real estate agent, because their pricing techniques and the other tactics that they're going to employ to get your house sold are going to be vastly different from somebody like me, who actually understands a chaotic or downturning market. So if you're in my particular market, which I service the entire western side of Montana, there is another thing to consider. And it's just this, is that I offer variable rate commission. And what that means is that we can actually get your house on the market for as little as a 1% commission. Now, understand that a customary commission ranges anywhere from 5 to 8%. And so if you are really looking at your bottom line and saying, I want to make sure that I can get as much money as humanly possible out of this place, the commission does play a role in that. And so if you are interested in having that talk about commission, or you're thinking about putting your house on the market, give me a call. And I'll be 100% honest with you. If it's a good fit, fantastic, let's move forward. If it isn't a good fit, I'm also going to tell you that. Once again, I'm not trying to scare anybody with what's happening in the market, because who knows, I could be completely wrong and the market could take a complete and total turnaround and go back to this wonderful, amazing market, low interest rates and a lot of buying activity. It could happen. I just know that looking at the data, what is likely to happen, and looking at the market of what we got right now, is that we're definitely plateaued. And so whatever decision you make is whatever decision you make. And you just need to make sure that you have all the information that you feel comfortable in whatever it is that you're doing. Thanks for watching.